Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, July the 13th. The year's 2022. Let's talk trading. Nothing to fear. Part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, we had a pretty interesting day here in the past hour or so on the pound dollar with that news coming out.
Yeah, it moved the market big. There was like an 80 pip move on like a 1 minute candle. I mean, that's kind of crazy. And you know what? That's the stuff that can happen. In trading. I'll say trading forex, but it can happen in anything. I don't care what you're trading; it can happen. We've been talking about this whole idea of fear in the last couple of days, but should you fear that? You know, and sure, it can happen, but the thing is, I don't think there's anything to fear there. And here's the reason why. We got option one is that what we do is, you just, if you're in a trade, clear the table before it happens. If you know that there's certain things in the market that are going to move it big time because of some type of news drop, and it was, what caused this today was the CPI, which is the inflation indicator for the consumer price indicator for, for the U.S. market, which is a leading indicator for inflation and a huge indicator of what the Fed will do in terms of raising or lowering interest rates. And so that's probably with the current times that we're in, it's not guaranteed it's going to move the market, but there's a pretty good chance that it will, and it certainly did today. So, okay, that's something that's something to be a little bit fearful of that could happen. But like we said yesterday, you got to take fear and turn it into excitement. So how do you do that? Well, like I said, option one, just clear the tables. Don't be in any trades when that happens, or at least be hedged. That way you don't have to worry about it. And it'll just takes all that fear out, because no matter what the market does, you're not going to lose any money. You may not make any money, but you're not going to lose any money. So that's option one. Option two is that, again, I would say it always starts with not having any money in it. Wait to see what it's actually going to do. And wait a minute, 2 minutes, 3 minutes, whatever that parameter is. And then maybe you can take that fear and turn it into excitement, because what you can do is, once you see what the market's actually doing, you got a potential where you could jump in and make a bunch of money off of it. So that's how you take fear and turn it into excitement. What are your thoughts?
Yeah, the thing is about the excitement. Number one, you mentioned hedging. Now, some people, if you have a U.S. broker, they don't allow hedging. So it's best to clear the deck. And sometimes what you can do is you can put pending orders. So I've got the chart here with the Walmart lines, and I also have the previous day's high here at 119.15.5. Let's just call it 119.15. And when the market opened, you could have actually had a short there. I don't know where it would have filled you, but even if it didn't fill you until 1880, it still dropped another 40, 50 pips from there. That's
Right.
one way to play it. Um, Another way is just to stand aside for the first, or just stand aside until like the top of the hour and just wait for the hour, and then you can see what happened, because that's the hour we're in now. If you would have waited, you see how price went all the way down, put in a new daily low, came back up to the open, and reversed all the way down to the launch pad. And so you can see here this hour prices dropped into the launch pad, which I call any of the 40s, so anywhere from 1840 to 1849. You can see it dipped in there, but it's always closed above it. So there was opportunities there to get long and take some pips off the table. So that's something else. So basically, is either you stand aside and don't even trade the news. You can put pending orders, or you can just wait for it to settle down just let that half hour play out and see what happens the next hour. But as far
Right.
as fear goes, yeah, you definitely turn this into excitement because you see, hey, I can make a lot of pips really quickly. On the other hand, if you're on the wrong side of the trade, you can lose pips. But so long as you have your stops in place, you already know what at least one of the possible outcomes is going to be, and that's how much you're going to lose.
Right. Yeah. Now, but the thing is, uh, you're not guaranteed that the broker will actually fill that stop at where you want it to fill it. But at least you got the stop in there, so you may not get it exactly where you want it. But if you are not, over leverage, well, not over leverage, but having too many lots on when you're in that trade, at least there's you shouldn't. You may get hurt, but you won't get hurt as badly as you could get hurt. So, for instance, let's say you were long and and it goes against you, and and it really starts dropping very, very quickly. And let's say you had your stop at, let's say, I don't know, 1910, and they may not fill you at 1910. It may fill you at 1900, or even 1890. And that's an additional 10 or 20 bips. But you need to go and put that into your plan. But that's a potential that what could happen. There is, at least it's not as bad as getting filled. You getting out all the way down, let's say at 1840 or something like that. So put that into your equation of thinking about what to do. If you're not going to go and stand clear at that moment in time, then that's yeah, at least you're most likely not going to get the worst of it. You'll get hit, and it'll hurt. Believe me, it'll hurt, but at least it won't hurt so bad that it takes you out of the game. As long as you're smart enough to go and have that, and again, as I said, that part of your plan. And there are other things you can do also. You mentioned that U.S. brokers don't allow hedging because that's that's a regulatory rule here in the U.S. And there are other ways you can go and do that, take care of that as well. One, you could go to an offshore broker and deal with an offshore broker. The problem with that is some of them are not regulated, and sometimes they play some games that you may not want to play, and can cause you some trouble. But if you go to some of the European, brokers, they do allow hedging, and they do allow U.S. customers, or at least most of them do anyway. And so, that's another possibility. A second possibility is that, and I know, like, for instance, Tiara, I know that you love, trading with the yen. What you could do is you could take an offsetting trade on the dollar yen, and that way, if it does move in some ridiculous fashion, usually speaking, not always, but usually speaking, because those pairs are conversely, correlated. If the pound is going up, usually the yen is going down. So in a situation, in a news event, that's almost always going to be true. And so that's another way that you can go in. Not necessarily hedge it, but that's called an arbitrage hedge, and that's just another way that you could go and keep yourself protected, at least for that moment in time. And why would you want to keep yourself protected? Well, you may want to keep yourself protected because it's a situation where you don't want to get out of the trade. Let's say you were along in this situation and you really think that we're going back up to 1.2, or even better than that, and you don't want to get out of the trade. Okay, that's a decision that you've made based on your plan. So the best way to protect yourself in that situation is to go and hedge it. And if you do hedge it, once the news event is over, you can go release it. Or if you go and see that, hey, look at this, the market is actually going where I think it's going to go, I can go and release my short of the hedge and take advantage of it, and maybe get to that place where I want it to go. And those are just a little bit more advanced ways of dealing with it, but that's generally speaking. I don't like to trade the news, and I don't like trading during the news. But when I've gotten caught because of market conditions and I'm stuck in it, that's usually how I protect myself.
Yeah, well, there's one other option. You can create a synthetic hedge. So, for example, let's say you're long the pound dollar. You also go long the dollar yen, but then you go short the pound yen. So that way you're flat. And,
Right.
there might be some variance, but it's not going to be such that it'll kill you. And that's
Yeah.
the thing where you can put those synthetic hedges on.
Right. And then what that does for you is, well, the difference in it where it doesn't completely make you flat, but really, really close. And the difference is going to be really what the difference of what the spread was between all those trades, which is, a pip or two. And, that shouldn't bother anybody, because if it is bothering you, that pip or two, if that's bothering you, then that means you're trading way too heavy.
Yeah, so I think the other thing, on the fear part of it is that a lot of traders um, don't really have confidence in their system. So they're constantly second guessing it. And, even sometimes I will, not that I'll second guess things, but I will try to optimize. And that's what and I usually wind up kicking myself because I'll optimize myself out of the winning trades and into a losing trade. And so it's just like, something as simple as the Walmal method. You already know where the entries are. You can see, okay, if it's green at the line, I just go long. But I might say, well, I'm looking at some other indicator and it's saying blah, blah, blah. And next thing I know, I missed out on, 5 pip trade.
Right. Yeah, and it's I like your expression because you say it all the time. And that is that, are you being too cute?
Yeah.
And and it's so true. You can go and cute yourself out of a lot of money, and it could be because you don't take the trade you should have taken, or you're being so cute that when you should have gotten out and you should have exited, you didn't, and then the money that you had sitting on the table, it suddenly disappears and it's in somebody else's pocket.
Yeah. And that's another thing where, um, when you go into the trade, and goes back into turning it into a gamble in the sense that you put your TP on, you put your stop loss on, you sit back and watch what happens, as opposed to go, okay, I'm up 2 pips, should I get out? Oh, I'm up 2.2 pips, should I get out? As opposed to saying, you know what, I'm either going to make 3 pips on this trade or I'm going to lose five, or I'm going to make 10 pips on this trade or I'm going to lose five. And then you just sit back and wait. And the question then
Right.
is, um, you take all of that, you basically take all of the management out of the dynamic and you make it static. And what I mean by that is, as opposed to managing tick by tick, you've already managed the trade once you've entered the trade. It's right there. Your TP, your stop loss, there's nothing else you can do. It's kind of like putting your money up, at a casino in Vegas. You place your bet and then it's like no
Yep.
more bets. Then you see how the game plays out.
Yeah, and that's a valid way of doing things. I implement that too a little bit differently than some traders do, but yeah, that's exactly what you do. It's sort of like, again, talking about Vegas type of thing, where it's sort of like when you go to Vegas and they run the roulette wheel, okay, and you need to go and get the bet in. You can put on red, you can put on black, you can put it on number, whatever you're going to do. But once you put it on there, you can't change it. You just let it ride, and you either win and some money, a lot of money, or you lose. That's really your only options that you have. And the great thing about that is that you know you may get frustrated, but you're not gonna. There's no fear. It's either gonna happen or it's not.
That's
And
right. And it's
that's
just like we get the fastest 15 minutes in trading just happened. So, fellow traders, we'll probably continue this tomorrow. Man, the 15 minutes just goes by quick, Walter.
it
So
does.
just
It really
remember,
does.
it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.